Hey everyone, and welcome tonight. It's great to be here with you folks from the Washington REAPS again. I had a fantastic time last week when I was out there. What a absolutely gorgeous area of the country you folks live in, and and I'm looking forward to coming out there on Saturday. And I want to spend this time tonight to kind of go over exactly what it is that I'm going to be covering on Saturday. I know we kind of ran out of time. I jammed it near the end of the conversation. I'm going to touch base upon all the highlights of the discussion on Saturday. Saturday is going to be a jam-packed session. There are going to be so much coming at you. If you make sure you bring a lot of paper and pens, because I'm going to be just inundating you with stories, with my experience, and what I do on a regular basis for my clients and my students. I will be answering questions here tonight, so if anybody has any, if you look down on the content box, you can just type in a chat, and I will try to get to your conversation. I try to get to your question later in the conversation. I'm going to try to keep this to about a half an hour, so I'm going to speak very quickly. I'm going to talk very fast also on Saturday. It's kind of a New England, New York thing, they tell me. I can't perform well in the southern part of the country because I talk too fast. So I'm trying to get it all in, and let's get started. All right, let me talk about some of the myths that are holding you back from doing apartment investing. One of the things that we're going to start with on Saturday is I really want to get an understanding of where you are today, what your goals are, what your objectives are, and how I can help you just in the course of the day on Saturday. Start to better understand exactly what multifamily investing is all about. And let me run through some of the myths. For instance, you need cash. I can tell you that most of the properties I purchased, they were purchased with none of my own cash. We put together syndicated deals. We raised private money. We did friends and family offerings, and that's how we purchased our properties. You don't need credit. When you're dealing with a multifamily property, the property is the credit. Depending upon the size, there are different underwriting guidelines. I'm going to talk all about that on Saturday, so you know exactly what it takes from a lender's perspective in order to underwrite a deal. Myths. You don't need a whole lot of experience. You don't need a whole lot of expertise. That's what I'm here for. I'm going to help you every step of the way so that you can get out there, get started, get your feet wet, and really become an expert and an investor in multifamily. You don't need lots of education. I mean, you got to get out there and do it. You can't. At some point, you've got to pull the trigger and start doing deals. The great thing that I heard the other day was perfection is for cowards. That hit me so strong, because if we sat around and waited until we had all the education, until our whole situation was perfect before we started to do anything, we'd never get anything done, because it's never that way. So you don't need a lot of education. Don't sit around waiting to get it. Everything you need, all the resources are at your fingertips. You can't make money quickly. If you're doing bird dogging, if you're doing wholesaling, if you're getting out there finding the deals on a regular basis and you find a great property, you can make money in very short order. I'm talking 30 to 90 days. 30 is a very short window. 90 tends to be more what a typical multifamily transaction time frame is. Apartments are harder than houses. I'm sorry, folks. I From all the properties I own, I think apartments are a lot easier than houses. And what I've seen, the people that come to my 3-day training seminars, they're mostly single family home investors looking to get out of that business because it's so hard, and they're looking to get into the apartment side. The market is too saturated. It's too competitive. Yeah, if that's what you think, tell me a market that isn't. And if you can, great. If you can't, you're just going to sit home and you'll never accomplish anything. Folks, every business has competition. But I would like to say that the apartment business has less competition because fewer investors are doing it. So if you're out there looking for deals and trying to find deals, there are very few people out there beating down the doors or chasing your tail trying to find that deal ahead of you. It's not as saturated a market as you think. And this isn't a good time to make money in this area. I'm telling you right now, folks, my properties are performing outstandingly. It hasn't always been this way, but now is a great time to be in this business. And it won't work in my area. It works in any area. Every area needs multifamily. Um, every area is ripe for the taking. And you know how I mentioned in the conversation last Thursday that Washington does not allow bird dogging. Okay, that's the law. You have to have a license in order to receive any form of compensation for the transfer of a property in Washington. It doesn't, you don't have to be a bird dogger in Washington. When you find somebody who's got money and is looking for a deal, you want to find out what type of property they're looking for and where they're looking for it, and you want to get out there and find it for them. It could be Texas. It could be Arizona. It could be California. It doesn't have to be in Washington. So let's talk about some of the stuff that you're going to be learning on Saturday. I've broken this down into 7 parts. This is a typical 3-day seminar for us. I'm not going to be able to get down to parts 6 and 7 during the Saturday event, but I am going to try to hit all of these first 5 parts in that 8-hour day on Saturday. And you know, my flight doesn't leave until Sunday. I'll stay as long as I have to if you folks want to keep hearing me talk. So as you recall, this was a very funny slide that we did on Thursday, but I really want you to look at this picture and understand the progression of the business. This is the multifamily real estate investment business that we're talking about. This business, um, this business uh, has all different phases of it, and you need to understand exactly how these phases work and how you get paid in each phase, and who your customers are in each phase, and what your products are that you're selling in each phase. If you remember, we talked about bird dogging being the man on the left, the most basic, earliest form of multifamily investing. In that area, your customers are other investors. Your product is information. Next food up the food chain is the wholesaler. Your customers are investors. Your product is a contract. Next one up the frame is the syndicator. The syndicator, his product is a deal, and his customers are other investors with cash. Or actually, more the best way to look at those people are silent investors, cash investors. They're not going to be out there doing the deal themselves. They just want to put their money into some investment. Next up the frame is the owner operator. The owner operator is the person that owns and runs his own properties. He's gone out, he's raised the money on his own, and now he's out there owning and operating the property. That's his business. That's kind of where I am in my multifamily investment business. And then jokingly, we said that the most evolved person was the lawyer. The last person is the lawyer. Well, you know what? I should have followed up on that and said, well, in our business, in the real estate investment business, the real top of the food chain is the investor, is the lender. The lender is the one who really is at the top. Everybody's trying to move up to that particular point. That's where we'd all love to be, is the person that just lends money all day long, doesn't have to deal with all the other stuff. But I can tell you right now, not everybody's going to get there. But the multifamily investor, I think, has the best business going. So having said that, let's talk about you need to understand, as I just said, in the multifamily business, you've always got to know who are your customers, what products are you selling, and most importantly, how do I get paid? And this is something that is so key. And I stress this in the class. If you're a bird dogger, I'm going to show you what contracts you need to have signed, when you need to have them signed, and what to do with them once you get them. If you're a wholesaler, I'm going to show you how to go through the process, how to get a deal under contract, and how to get paid yourself. And we're not really going to get to the syndication level, but I can talk to you about how a syndicator makes their money throughout the process as well. So it's very important that when you're looking at multifamily transactions, multifamily deals, that when you look at that particular deal, you know who your customer would be for that deal, you know what product that that it is that you'll be able to bring to the marketplace. You're looking at that deal. Maybe you're just going to bird dog that deal. Maybe you're just going to wholesale that deal. And then you're going to look at that multifamily deal and you're going to think, how can I get a payday on this transaction? And so that's what we're going to be teaching on Saturday, so that when a multifamily deal comes across your desk, that mindset, those checks go right through your mind as to, this is how I need to look at this transaction and figure it out. All right, so let's see here. First thing we're going to talk about is finding the deal on the internet. Now, I'm going to show you how little time it takes to make that happen. I'm going to show you how much money it's going to take out of your pocket to get started doing this. And I can tell you right now, folks, the answer is zero. And I'm going to show you what type of resources and expertise you're going to need in order to find deals on the internet. Now, one of the best things that we're going to do, and this is how it's going to start out. I'm going to show you how LoopNet works. And I'm going to spend the first 10 minutes walking you through LoopNet. And then I'm going to stand there and say, if you think I flew 3,000 miles to teach this classroom of people how to use LoopNet, you're crazy. You're out of your mind. Let me show you how not to use LoopNet, and let me show you how I use LoopNet to find deals. And these are little tricks of the trade that nobody ever talks about, but I'm going to share them with you on Saturday so that you understand exactly how you can jump on the computer as soon as you leave the class, and you're going to be finding deals right away. How much time will it take to start finding deals? If you go, here's a list. These are my top 10 websites for finding off-market deals. And some of them are truly off-market. Others are kind of what I call semi-off-market. But we're going to go through these types of sources so you understand what you do with the information you find on these sites. One of the you'll see here, offmarketassets.com. Those are my friends at Genesis Capital. That's a great place for you to look. A lot of these other sources are what are called special servicers. They take properties back that banks have foreclosed on, and they manage them, and they have to get them off their books. They've got websites out there with deals that you can find that other investors don't even know about. If you have an investor looking for a particular deal and you find it on one of these websites, that's a potential for you making some money right there. So we're going to go through all of these types of sites and get you to understand exactly how they operate. Now, the next thing we're going to talk about is getting the right property information. And this is key. This sounds very simple, but just think about it. If you're new at this business and you're out there trying to find deals, okay, you find a seller that is looking to unload his property. What do you do? What do you ask him for? What kind of information do you need to get in order to take that information, turn around and sell it, or get it under contract and wholesale the deal? You need to understand what questions to ask that seller in order to find out if you really do have a deal. Now, that's on the seller's side. On the buyer's side, the people looking to buy properties or buy deals from you, you need to find out exactly what they're looking for as well. And I'm going to show you how to automate that process. I'm going to show you a couple of samples of websites where people actually, bird doggers and wholesalers, have set up websites where people can come on and fill in their property parameters, and then you go out there and find deals for them. So a couple of the things that you're going to need to understand, and we're going to really get into detail on this, and so that you know how to ask these questions the right way. You always want to know how many units does a person is looking for. 20 units is a totally different lifestyle than 100 units. 100 units is totally different than 350 units. You've got to understand, when we talk about number of units, what that exactly means. Purchase price. I'm looking for a deal that is $5 million. Why is $3 million a very magic number in this business? What happens at $3 million when you're looking to do deals? What happens if you're looking for deals below $1 million? What type of questions should you be asking the investor when they say, I'm looking for a property that's right around $1 million? Okay, How do you plan on closing on that deal? Tell me about your financials. Tell me about your credit. Tell me how you're going to put this deal together, and maybe I can help you out that way. So you're going to ask tough questions. Year that the property was built. I don't like anything older than 1980. Some people have absolutely no problem with it. Different parts of the country, it means a lot more. Other parts of the country, the age, you find a nice apartment building in New York City. Very rarely were they built in the 1980s. So understanding what year built means is key. If you can get some property pictures, it really helps your sales process to your customers. The location is key. Some cities, and I don't know if this is Seattle. Maybe you'll understand what I mean when I say this. But there are some cities where if you miss the neighborhood by one street, you are in a totally different world. I made that mistake in Cincinnati on a deal that I did. I'll never make that mistake again. So when we talk about location, we're not just talking about the city. We're talking about the actual submarket, the actual neighborhood in that city, and understanding what's going on in that particular area, so you can sound very educated to your potential customers. And then, of course, any renovations that were done, renovations, and this is something we're going to talk about when we go through the property package. Renovations are a very nebulous term. If somebody says, "Oh, this thing went through renovations in 2002," well, in the apartment world, 10 years is a lifetime. So renovations done in 2002 are virtually meaningless. You've got to understand what this finger quotations code that the sellers are trying to put on you. You need to understand exactly how that works. Now, other things you're going to need, not just the property information, but you're also going to need to get the financial information from the seller. And you can't be bamboozled by this. And I'm going to tell you and teach you what I mean by being bamboozled by the seller's financial information. He could give you a financial statement and you look at it and think, "Oh, I'm so new. I guess this looks great." And I'm going to teach you how to read a financial statement so that you'll never be bamboozled by some of these sellers. You're going to need to understand the net operating income, the NOI, and how that's calculated. Very easy number to calculate, but very important number in this whole calculation. You're going to understand the cap rate. We're going to talk about the cap rates in different areas and how they work. We're going to go through some of the income and expense statements, actual income and expense statements for a property. And then you need to understand the loan information for the existing loan, so that maybe you're going to take over the loan. Maybe you're going to what's called assume the loan. I know a lot of these on the single family side, you hear people talk about subject to. We don't really do subject twos on the multifamily side. What we do are assumptions. So you need to get that information from the seller so that you can put together a nice package for your customers. Then we're going to learn about how to analyze the property package. Folks, this one is going to be an awful lot of fun. What we're going to be doing is going through an actual property package that I picked out. This is a Marcus and Millichap property package, and we're going to go through it from first page to about the 20th page. And you're going to understand exactly how these brokers put these deals together to make them look and sound really attractive. And you're going to figure out exactly what the code is behind these, so that you won't be bamboozled. As I say, you won't be bamboozled by these brokers. When you see a property package, you'll be able to cut right to the chase and figure out exactly what you need to know about this particular deal. Now, when we're dealing with off-market properties, we tend not to work quite a bit with the actual nice, pretty property package. Those tend to come from brokerage houses. But I'm telling you right now, folks, I actually have an offer out on a deal, nice property in Kentucky. It came into me from a broker, but it's off market. But I got the whole nice, pretty property package, and I was able to go through it and figure out which numbers were right and which numbers were wrong. And there was, it looked really nice. There are other off-market deals where you will never see that type of information. You'll just get an income and expense statement. The guy will say, "Good luck, make me an offer," and that's what you have to work with. So I'm going to teach you all about that, so you know exactly how that operates. And then this one. I know I talked about this on Thursday. And I know what we said. I told you that I love this part of the equation, the financial accounting for the multifamily property. And I really like it because it tells the entire story of the property. And I actually happen to share some office space with my accountant, and he and I talk about accounting concepts all the time. Uh, I'm going to teach you how to understand the different categories on an income and expense statement, and I'm going to explain to you the tricks that the accountants and the sellers and the owners use to make their numbers look better than they are. And I'm going to go through a bunch of rules of thumb so you know exactly what the numbers should look like. Folks, when you get good at this business, I can analyze a financial statement in 3 minutes and know whether we've got a deal or not. It gets that easy. When you understand how a financial statement works, it will make that much sense to you. You know, my accountant one time said to me when we were going through it, he said, "You know what? Accountants rule the world." And I said, what are you talking about? Why would you say that? He says, "Nobody makes a move unless their accountant tells them it's okay." And I thought to myself, geez, you know what? He's kind of right. That is exactly how it works. So I stood there and I thought to myself, what comeback do I have to that? And the best I could come up with was, well, lawyers rule and accountants drool. And I sounded just like a 15-year-old girl, like my daughter. But that was the best I could do. But I knew exactly what he was talking about and why he felt that way. But let me talk to you about some of how the concepts work. And this is what you need to understand when we're talking about financial statements. Look at a property this way. Every property that I look at, I pretend that there's a little old lady who sits at the front office every single day and she runs that property and she's been there for 20 years. And she either does a great job or she just sits there and is everybody's best friend while the property bleeds money. And so what I am able to do by looking at the financial statement is I am able to tell exactly what a day in her life is like, just by looking at the categories of the numbers. And I'm going to show you exactly how to do that as well. We're going to go through all the different types of income. We're going to talk about the fee income, the utility income, rental income, all different other types. We're going to go through the expenses. And I'm going to tell you that, how taxes are calculated, the insurance is calculated, utilities, management fees, payroll, replacement reserves. We're going to go through all of these numbers. I'm going to apply rules of thumb for you so that you can tell right away, does that number make sense? One of the biggest numbers on here is payroll. Well, what is an average payroll for a property? Well, you probably don't know, but I do, and I'm going to show you exactly how to calculate it. And once you figure out exactly what the numbers should be, you'll know whether the seller is giving you a good deal or a bad deal. Now, from the income and the expenses, we get the magic number, and that is the net operating income, the NOI. This is the key number in the equation for the value of the property. This is the income that is generated, the net income that is generated off that property. And that's how we determine value. It's that simple. And then I'm going to show you how to take the cap rate and the NOI and determine the purchase price, or vice versa. Once you know 2 out of those 3 variables, you can solve for the third. It's a very easy business when you understand the formulas. And that's what I want to be teaching you on Saturday. So a couple of other things we're going to go through, and this is key because many people don't understand this, and I'm going to make this a lot of fun, is some of the ways that the brokers or the sellers trick you into making their numbers look better. Sometimes they'll modify the time frames for those income statements, and you've got to pick up on that right away. You got to make sure that the income period matches the expense period. I've seen this so often. The brokers pull this one all the time, and I see new investors making this mistake and believing them. And then not only believing them, even once they've been told that the numbers are wrong, they say, "Oh yeah, but this is how it's going to work." And I'm going to talk to you all about that on Saturday, so you don't become one of those casualties. We're going to talk about taxes, taxes, and taxes. We're going to explain and you're going to understand how property taxes work on multifamily property. It changes in different areas. You just need to understand it. It's going to be a very, very important discussion for you. And then last thing, folks, pro forma is Latin for pretend. Nothing exists in the pro forma. You don't even want to think about pro forma numbers. You only want to deal with real, actual numbers. If you can't get the real, actual numbers, do you really want to buy that business? I wouldn't want to. So make sure that you look at this at these financial statements and you get the hang of it. You're going to have a fantastic understanding of exactly how this works when you walk out the door on Saturday. Now, part five is where we start to wrap up the end of the day. You've just gone through the numbers. You've been able to find deals. You've been able to talk to the sellers about their deals. You've been able to get the property information from the sellers. You've gone back to your computer and now you're starting to crunch the numbers. You find the numbers, you put them into your spreadsheets, and you come up with a number that makes sense for a wholesaler. So now what do? Well, if you're wholesaling, you got to make an offer. But you got to make an offer that's going to get accepted. I mean, you can make offers all day long, and if they're crazy offers and they never get accepted, you're not in the business. So you got to be able to understand what's the best way to make offers on multifamily properties. And I'm going to take you through that and show you exactly how to do this. This is what I do with my students and clients all day long. We make offers. And there are different ways and different tricks that you can do. And I'm going to show you all the different ways you can make offers on multifamily deals that get accepted. That is the key part. We're going to talk about the elements of an offer. We're talk about making your offer fit the circumstances, meaning if it's a bank-owned property, if it's a distressed property, if it's a cash flowing, positive cash flowing Class A property, you've got to make an offer on a property that makes sense depending upon the circumstances of the property. And that's going to make the determination as to what things you should be able to put in your offer. And then you got to get ready to perform. You got to know, okay, I just made an offer. What's going to happen next? What is going to happen next that I need to do? And I'm going to take you through the whole entire acquisition process for a multifamily deal. I'm going to show you from the time you make the offer until the time you close on the property, whether you're bird dogging, wholesaling, syndicating, or being the owner operator. I'm going to take you through the whole life cycle of a deal so that you walk out of there like, okay, I get it. I get it. Some of the things about the elements of the offer, as I mentioned, the negotiation process, taking you through the whole point. You're going to have to put a good, solid purchase price on there. Why is $3,050,000 a better offer than 2.999? It's all in the mindset and the psyche of the seller. He wants to see the number 3. We see that all the time with deals. Time periods. How long should the inspection period be? How long should I get for financing? How long is it going to take me to close? I'm going to tell you all of those different things and tell you what you should be asking for based upon the circumstances that you're in. I tell you why you never ask for a repair allowance in the LOI, in the letter of intent, in the offer. Just don't do it. I'll show you why. I'll explain exactly why you should never put a repair allowance in the offer. The thing that you need to understand is that you are a problem solver. The seller has a problem. I don't care who he is. I don't care if it's Donald Trump. I don't care if it's Leona Helmsley, but obviously she's got more problems. I don't care if it's any big investor. When a person is selling a property, he's doing it for a reason. He's trying to solve a problem. He's trying to move to a different community. He's trying to get out of the business. He's trying to settle a tax problem. There's a problem going on when a seller is selling the property, and you need to figure out what that problem is and then get creative and come up with terms that solve his problem and benefit you and your buyer. We're going to talk about seller financing. We're going to get into a whole discussion on seller financing. I know you might be thinking to yourself, man, we're going to do this all in one day. Yeah, I'm going to bang through this stuff very, very quickly. And there's going to be a lot coming to you very fast and furiously. But one of the things we talk about is seller financing. We hear this all the time that people are saying, hey, will the seller take back a second mortgage? Yeah, the seller will take back a second mortgage. Stop right there. Don't take back a second mortgage. Just don't do it. I will explain to you exactly why. You can get seller financing, but just don't call it a second mortgage. All right, and I'll explain why on Saturday. Now, things that you're going to need to do to perform. If you're doing the wholesaling, if you're the guy who's going to wholesale the deal and you don't have an end buyer already lined up and you got to start performing under the contract, you're going to understand about the earnest money deposit. You're going to understand about the inspection period and how it works. You're going to understand about the financing period and then also the closing date. These are all the time frames of a typical deal. These are the things that you need to do to perform under the terms of a purchase and sale agreement for multifamily property. And I'm going to walk you through each one of them so that you can know exactly when it comes time to get a deal under contract, this is what you're going to need to do. Then finally, part 6, we're not going to get to this on Saturday. We're just not going to have time. This is stuff that I cover in my 3-day class. We start talking about getting the deal under contract. And getting the deal under contract is key. Once you have an accepted LOI, you don't have a deal yet. You still have to get to the purchase and sale agreement phase, and that takes more negotiating. And when we sit down and talk about it on the 3-day, if you come to one of my 3 days, you will see exactly what I mean by this. Things that you should never, never, never do in a purchase and sale contract. You need to understand that it's a legally binding agreement. Once you sign on the dotted line, you are committed to perform certain tasks. The purchase and sale agreement covers all aspects of the transaction process. All aspects. Anything goes wrong, you look in the 4 corners of the contract and the answer is right in there. Now, you also need to understand if you're wholesaling a deal that you now have under contract, you got to understand how to protect yourself. And by what you need to do is you need to understand the time frames, the inspection period, the financing period, the closing period, and what risks are involved in those time periods. You've got to understand the earnest money. Who holds the earnest money? You never let the seller hold the money. That's for darn sure. Have your team in place to make things happen. And as I always do, and I do this for my clients, I do this for the students, and I teach this. I said, listen, the day you execute a purchase and sale contract is the same day you execute a termination letter. You execute the termination letter and you post date it based upon when you're supposed to be getting out of that contract. If the deal isn't going your way, terminate the contract. Get out of it. It never gets any easier. So these are the types of things we talk about in the 3-day. We're not going to have time to talk about these things on Saturday. But here's something else. How does a bird dog or a wholesaler get paid? This is something we're going to talk about so that you understand exactly when you walk out of the room, okay, now I get it. When a deal comes across my desk, these are the ways that I might be able to stick my hand in the stream of commerce and understand exactly how I can make some money. The best wholesalers, the best bird doggers are those that quarterback the deal. They don't just dump and run. They don't just dump this deal on an investor's desk and get out. They get paid at the closing table as well. So they want to help that deal get to the closing table as best they possibly can. They need to bring value to all the parties. They want to make sure that all the parties understand their value, the bird dog or the wholesaler's value, and they can come together and bring them together so that they solve any problems that might creep up during the course of the transaction. If the buyer needs financing, you get financing for the buyer. If the buyer wants to renegotiate a part of a deal, be a party to the renegotiation process. Help the deal get all the way to the closing table. If the buyer's syndicating the deal, help the syndication. If you're looking to move up the gravy train here to get to being your own owner operator, you're going to have to learn these steps anyway. So stay in the deal and learn as much as you possibly can. And then finally, make the deal happen. If there's no payday, if there's no deal, there's no payday. So if you can be involved in the transaction process, do it. What does every successful person have in common? Obviously, you've heard this a million times, folks. And I'm telling you that this is so true. You have this burning desire to succeed. There was a gentleman that came up to me at the end of our meeting on Thursday. I'm not going to mention. I don't remember his name. I do remember what he did for a living, and I think if I mention that, I might be disclosing some confidences, which I don't want to. But he said, every day I just want to own. I know I want to own multifamily property, and I was like, yes, that's exactly the way I was. I had this burning desire to succeed. I had this burning desire to own property, and I didn't stop until it happened. And I'm telling you, folks, you got to have that burning desire, because once you get there, it is a phenomenal business. It requires some very specialized knowledge, not a whole lot. Once you understand this business, you'll realize it is such an easy business. One thing that I mentioned in our class, that I had fired all of my property management companies. And one of the things that I did when I fired, remember when I hired these guys, is they all said the same thing. This business is not rocket science. They all said that. And I thought to myself, when I finally fired him, I said, if this business was not rocket science, why couldn't any of you guys do it right? And now I'm doing it, and I'm having a grand old time doing it. So it doesn't require a whole lot of specialized knowledge. It's not brain surgery. It's a great business. You've got to be decisive in nature. You've got to make, when it comes time to pull the trigger, you got to do it. Be focused on your goals. Know exactly what it is you want to accomplish this year. We're going to start off the conversation on Saturday asking the question, what are some of your goals? Because I really want to get a handle on what people in the audience are looking to accomplish. And then get into a mastermind group of like-minded multifamily investors. Now, this is something that I worked out a deal with Catherine at REAPS for anyone on this call tonight, okay? Now, here's something that we do at the Multifamily Investing Academy. We have a multifamily mastermind group. Okay, it is a group of like-minded people who all come together to share ideas, share concepts, learn new strategies for buying multifamily property. It's a place where people can come and swap stories. It is not one where you never get to talk to other people. It's a very interactive group. And what it entails is every Monday morning, you're going to get a video tutorial on a different aspect of the multifamily business. Also, twice a month, you are going to get a video that I shot, what I call my look over my shoulder video tutorial. I am in the process of finding and acquiring a multifamily property. This year, I've set it as a goal that I'm going to buy an apartment complex, add to my portfolio. It's a great time to buy, and I'm going to start buying. So what I've been doing is I've been recording broker calls. I've been recording screenshots of the analysis, and I put them together in video. So every 2 weeks, you'll be getting the new update to my soap opera of what it takes to buy a multifamily property. And you are going to watch me acquire a property every step of the way. That's part of the mastermind group, and we talk about that on the monthly FAQ calls. We have an open line. Anybody can call in, any questions, any problems. You share your thoughts. Once a month, we all come together and we talk about the business. And then you get email support from my office. It's not always going to be instant turnaround, but if you have a problem, you have something that comes up, just shoot us an email, and my staff and I will make sure that it gets taken care of. And there's so much more. So what Catherine has asked me to do is, if you register for the Saturday event tonight, you are going to get into the multifamily mastermind group, the first month's free. The first month is the first 2 months free. First week is $7, and then it's $97 a month thereafter. We're going to give you a special discount code so that if you register tonight, you can get on into the multifamily mastermind group for 2 months for free. All right. So if you sign up, here it is right now. And I took this right off the website, and it said, if you sign up tonight, if you're a member of REAPS, it's a $39 number, $39 sign up. If you're not a member, it's going to be $79. At the door, it's going to be $59 for members and $99 for non-members. So you save $20 by signing up tonight, and you also get the 2 months free of being in the multifamily mastermind. Okay. Lunch will be included, and that's one of the reasons why Catherine wants to get a good head count tonight, so that she knows exactly how many lunches to order. And here is the link to sign up. And I'm not sure, folks, and this is something I don't quite understand about GoToMeeting. I don't know if you folks can click on that and it's actually a real hyperlink on your screen. But if you can't get to this, you can get to it from the events page on the REAPS website. And I highly recommend, tonight is the night to sign up. I'm just about to close it out. So if anybody, you can't click. Thank you, Frank. Frank just told me that you can't click on it. Okay, so please go to the Washington REAPS website and sign up there. Hopefully Frank will be there on Saturday. But this is really the end of the conversation. If anybody has any questions, I'm going to keep it open for a little bit longer. Thanks, Frank. And I can't wait to be back out there to Seattle. I had a great time last time I was there. I did all the touristy things, saw the guys throw the fish. I had my picture taken in front of the Sleepless in Seattle's houseboats. Just did all that fun stuff, and that's one thing I love about this business. So I can't wait to get back out there. Can't wait to see you. If anybody has any questions about the business, all day Saturday I'm there. I'm there to help you out as best I possibly can. And I look forward to seeing you there. And I want to thank everybody for your time tonight. You've been a great audience. And I will see you all on Saturday at the Sheraton in right next door to where we were on Thursday. Thanks, everybody, and all have a great night.